It was a steady year in 2014 for Australia's capital city residential property markets, with the Reserve Bank of Australia's efforts to jawbone the property market down having little to no effect. Economists tipping another interest rate fall were proven correct in early February, when the Reserve Bank cut the cash rate by 0.25% basis points to a new record low of 2.25%. These historically low rates, combined with a steady demand and buyer confidence, suggests that the market will remain buoyant in 2015. Following a successful spring and pent-up demand during the festive holiday season, the new year is tipped to open strong in most capital cities. It's unreasonable to assume that all markets will perform at the same pace. Take Melbourne and Sydney, for example, which grew by a whopping 12.4% and 7.6% respectively in 2014, compared with Brisbane, Adelaide and Perth, which all achieved growth of under 5%. The growth experienced in these and other cities is largely the work of record low interest rates and strong interest from the investor class. However, each market and property type is also supported by a unique set of drivers that influence asset performance. In Sydney and Melbourne, these include continued population growth and an undersupply of housing, as well as affordability and unemployment levels. Meanwhile, Western Australia's capital, Perth, is subject to an oversupply of housing and the performance of the resources sector, which is expected to experience further decline this year. Similarly, the performance of the Adelaide market is sensitive to rising unemployment as a result of a decline in local manufacturing and is impingent on sound affordability. The Gold Coast and Brisbane, to a lesser extent, are dependent upon tourism amongst other factors. While each market and property type is unique, established housing and older style units and apartments located within close proximity to CBDs in major capital cities are considered among the best performing real estate. That's typically because of their proximity to established infrastructure such as schools, employment, recreation and lifestyle services, shopping centres and transport nodes. In 2015, this subsector of residential market is once again expected to dominate. Despite a stable forecast for 2015, selecting property with sound capital growth remains a complex process. Many factors including size, condition, suburb, street, lot location, orientation and broader economic conditions influence a property's potential capital growth. Analysing a property's historical performance is among the most important and effective ways to select an investment-grade property. So be sure to do your research before joining the ranks of the growing number of Australians now investing in residential property. Thanks for watching. If you'd like to receive more regular property updates, please subscribe to WBP's YouTube channel or visit our website.